I think this gold market may run for 5 years. This is not going to be 2008 through 2011. There are too many problems in the world. And so we're not stopping at $4,000 gold. We may finally get that $10,000 gold price. I don't know. It depends on what happens with the dollar. I suspect the dollar is eventually going to crash and they're going to go to stable coins and cryptos. I've said that for years. That looks more and more like what is happening, especially in the Trump administration.
If by the 30th September next week, silver is still above 44, it means we've made a breakout on a quarterly closing basis. So gold is looking very good. Yes, it's going to get choppier ups and downs, but it's mostly going to be up, in my opinion.
The rally in gold and silver reflects more than just market momentum. It's a response to eroding trust in fiat money and mounting global risks. The dot-com crash, the housing bubble, and the global financial crisis drove the bull run from September 1999 to September 2011. The current rally, also beginning in September, is unfolding against an even larger backdrop. If the last rally was born from one crisis, this one may be fueled by a systemic reset. RobertKientz, founder of Gold Silver Pros, and veteran precious metals analyst Mario Innecco highlight gold and silver as safeguards against the vulnerabilities of the system. In this video, RobertKientz underscores that smart money is moving into gold, silver, and even cryptocurrencies. Marking the early stages of a long bull cycle, Kientz notes gold could run to $10,000. While retail investors are just waking up, the wealthy are already moving in. For Kientz, we are in the final stage of a major gold bull run. Now, many investment banks and analysts have had to update their price targets this year continually. The Fed's recent rate cut was a clear signal of economic weakness, and according to RobertKientz, that's wildly bullish for gold. He notes that generalist investors are finally entering the market, with silver potential running above $50 this year. Wall Street is validating this growing mainstream bullishness. Gold prices reached a new record high on Tuesday, helped by growing expectations of more U.S. interest rate cuts. Investors were also waiting for a speech from Federal Reserve Chair Jerome Powell to get more hints about future policy. Before we dive into RobertKientz and Mario Innecco's sharp insights from their latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
Well, gold has definitely been so hot, Danny, and it's been a while since really the stackers in the industry could get excited, or the mining investors. It seems like it's just been a little bit of a rough ride, although the last year and a half has been great for gold. Now I think you're starting to see a little bit of generalist interest in it, primarily because the Fed interest rate decision last week to cut at their September meeting. It's just a quarter point, but they cut. And whenever you cut and you've got higher inflation rates and you have higher overall interest rates, and you have what looks like an oncoming recession, that tends to be very good for gold. So it doesn't surprise me gold's rising. Now, the funny thing is, technically, if you look at the gold chart and you look at the technical indicators, the RSI and 200-day moving averages, it was overbought or oversubscribed, if you will. And that's because a lot of that gold price is determined on that paper trade, right? And so the paper traders look like they're, head over skis. But with that interest rate decision, it's bought gold new life, and it's going to continue to push it up, because when you have a drop in interest rates, it's usually a sign the economy needs help, and that's bullish for gold, and people are starting to move to gold. So you're starting to see some generalist investors interested in gold and gold stocks, which is a very positive sign. Of course, silver being solidly above $40. The thing about silver being above 40, traditionally silver's only hit 50 a couple times, and there's not a lot of trading range in there. And so there isn't a lot of technical resistance. So I could see silver running for a while. We could hit $50, $60 silver this year. Goldman updated the target to $4,000 gold. And I was reading some articles earlier. Some of the banks are coming out saying maybe $42.50 gold this year. Maybe we're looking at $50, $60 silver. So certainly there seems to be a lot of bullishness in the financial space about gold and silver. 4,000 gold by end of year. And I think not a year from now, maybe in the next 4, 5, 6 months, they're expecting $50, $60, $70 silver is what some of the financial analysts are saying, not all of them. But the fact that you're seeing mainstream guys come out and really be bullish on both gold and silver at the same time, is a sign that you're getting that generalist interest. And historically, when you get generalist interest, you get money flowing from other markets. And if you go to, for example, the guys at North Star Bad Charts, they talk about capital rotation all the time. They're starting to see capital rotation come out of stock market and other assets, real estate and things. And it's starting to find a couple of things. It's finding cryptos and it's finding gold and silver. And you're starting to see both of those markets, in different ways react. And overall, I think it's going to be a good, what we consider an alternative, alternative asset market. All those paper assets, the stocks, the bonds, the real estate, you're going to see money start to come in. And this is going to be a long cycle. It's not all going to happen at once. But I think we're officially into the retail buyer in the US wanting to get back into gold and silver. And this has been a long time coming for stackers who have been really kind of waiting for this to have a sustained bull market in gold and silver since 2011. We had a little bit of a blip in 2016. That was short-lived. The pandemic in 2020, that lived on for 6, 7, 8 months, but it was short term. But now, given all the economic issues around the world, I think people are starting to rotate in. And it started with the central banks, and I'm having a lot of friends, and of course, I run a gold business as well. And for me and my friends, we're starting to see the high end. I just went to a coin show here locally in Grapevine this weekend. It's the biggest one here in Dallas-Fort Worth. They do it about 6 times a year. And I talked to a lot of my friends, and I'm like, what are you selling? And they're like, we're selling high end. We're selling numismatics, items with high premiums like the silver eagles. All of that stuff is starting to move. And in my experience, that is the higher end of the middle class buying the products that they want. And it usually happens before you have everybody else pile in. So I'm seeing a lot of good signs: Fed activity, gold sales, numismatic sales, a little bit of mining stock sales, and the chatter around these industries that people are interested. And when you get general interest is when those markets really run. So I think we're officially into that third and final phase of the major gold bull run that we were going to have in this phase. And last thing I wanted to say, as we were kind of talking before the program, I was looking at CNBC, and there were 2 reports of 2 separate Fed governors saying we didn't lower enough, we need to be more aggressive. So the Fed, certain members of the Fed are starting to get much more aggressive, and that is coming out into the news about the more aggressive members of the Fed wanting to cut more. And certainly the market wants it. The stocks want it. The bonds want it. The higher interest rates are killing bond owners because their face values are falling. And it's bad for the banks that hold all these bonds and their face values fall because those are assets on the books. And now you're starting to see that phase of the economy in which debt is no longer an asset. Debt is an albatross. And of course, that's going to eventually affect the banking system. So for a lot of people have been waiting since 2011 for what they see as the big boom in gold and silver. I think we're starting to actually see that now in real, and it's going to be sustainable for quite some time. Certainly, as long as the Fed's cutting interest rates, and certainly as we're seeing recessionary pressures around the world. I think this gold market may run for 5 years. This is not going to be 2008 through 2011. There are too many problems in the world. And so, we're not stopping at $4,000 gold. We may finally get that $10,000 gold price. I don't know. It depends on what happens with the dollar. I suspect the dollar is eventually going to crash and they're going to go to stable coins and cryptos. I've said that for years. That looks more and more like what is happening, especially in the Trump administration. They're getting more involved in gold. He did his meme coins. They're getting involved in stable coins. And I think that we're seeing the de-dollarization. So that's going to take a while. But I think that those economic problems that led to the problems with the dollar and led to the problems with the U.S. debt market is leading people into gold. And it started with central banks, and now it's the wealthier people, because like I said, it's the higher premium items. But I think you're going to start to see like the generic coins and bars move as well eventually. Also looking at what's going on around the world, there is a lot of movement around the world around resources to protect resources. So we're in commodity protectionism, and that will apply to the precious metals as well. So I fully expect that all of these countries are going to protect their commodities, and you're going to see higher prices in certain things. I think it will happen in some of the base metals. And this is going to be a very long-tailed, long-winded sort of market. But I don't expect that gold and silver are going to fall back hard anytime soon. There may be a correction. We've had a really long run in gold, honestly. It's going to technically correct at some point, but I don't think it stays down for long. I don't think we're going back anywhere around $3,000 gold. I think those days are over, and that may not come back for 6, 8, 10 years. So yeah. I do think that we're in that cycle. We went through the original cycle of the central banks first, the big players. And I would say, like, just last week in our business, I saw probably twice as many orders as I see in a typical week. And now it's very early, but we're also signing up new dealers to come on board as well. So the business to business angle is happening. And a lot of the dealers some of them are established coin stores. Some of the dealers are new people saying, I want to get into this. And these are people that are truck drivers, restaurant owners, business owners that are looking at the opportunity in gold and saying, I want to get involved in that business. And again, it's very early stage, but it's starting to happen. And that's exciting because in the US, we're really bad about investing in gold unless we fear something's going wrong. It's very cyclical. It's not like that in other parts of the world. The Middle East are buying gold all the time. Russia and China buy gold all the time, not in the US. And so the fact that we're seeing this positivity is good. But like you said, it's very, very, very early.
Gold and silver's strong performance isn't just a trade. It's a direct response to a failing political class. Mario Innecco says that with policymakers, from the UK's doubling down on fiscal irresponsibility, the system is breaking. He warns that citizens must become self-reliant, as a second bank war is raging, and politicians cannot be trusted to protect their interests. Silver has already broken records while simply revealing the truth about a system in collapse. Silver was last above $44 in 2011, and many of the same factors that drove it to that level are present in today's market, including significant uncertainty around the economy, a global debt crisis, and a dovish U.S. Federal Reserve. In his analysis, Innecco highlights Thomas Massey's push to abolish the Fed, stressing its immense power, likened to that of God. Trump, through Stephen Mirren and court rulings, could take control of the Fed. Innecco questions whether Trump will be a modern Andrew Jackson who dismantles the central bank, or, instead, merges it with executive power, which he warns could be even worse. Let's get back to the interview.
Gold and silver are continuing to do very well. Yesterday, actually, gold even picked up quite a bit after this statement from Stephen Mirren about rates needing to be cut by another 2%. Actually, he wants them down to 2%. Silver got above 44. And this chart here of silver, I posted it on X. And this was from yesterday. Silver is just above 44. And I did it on a quarterly basis. So if by the 30th September next week, silver is still above 44, it means we've made a breakout on a quarterly closing basis. Yeah, gold is looking very good. Yes, it's going to get choppier ups and downs, but it's mostly going to be up, in my opinion. What else is going on? Well, here in the UK, we have a lot of problems, fiscal especially. We don't have the major reserve currency anymore, so we can't print and spend as much as you guys can in the US. So the Chancellor of the Exchequer, who's basically the equivalent of Scott Bessent, the Secretary of the Treasury, Rachel Reeves, she's having a tough time. Her budgets have big holes in them, and her budget deficits are growing at an increasing pace. And why is that? Well, because instead of deregulating, cutting the size of government, cutting taxes, spending less, sending less money to countries fighting wars, sending billions to countries to fight climate change, instead of doing that, she's continuing to do it and spend and spend. And the economy here has been hammered. She's put taxes on employers. She hasn't cut regulation. And they've bent over for the public sector unions, give them huge pay rises. So now they're calling this Resolution Foundation, supposed to be a respected think tank, but it's just an elite think tank. It's a uniparty think tank. They're saying it says Reeves urged to break labor manifesto pledge and raise income tax. What a surprise. These people, they don't have your best interest, not just here in the UK, these politicians, but even in the United States. That's why I've always told my viewers, you need to try to become self-sufficient, self-reliant, live within your means, and never trust a word that any of these politicians say. Just look at what they do. There might be one or two exceptions, like Ron Paul used to be, like Thomas Massey is today, maybe Rand Paul as well, and some others, but it's a rarity. Here in the UK, unfortunately, we don't have anyone like Thomas Massey or Rand Paul or Ron Paul. Yet, the second bank war, it's raging. That's the way forward. Well, there are people like Representative Thomas Massey, who I interviewed recently, who have put forward resolutions for bills to end the Fed, to abolish the Federal Reserve system, the Federal Reserve Board, the Federal Reserve regional banks. He's put that forward, but of course, the Federal Reserve is very, well, it's almost like God. That's what Jim Sinclair used to call the Fed. They're like God, and they control everything. So do I really think that Trump, through Stephen Mirren and maybe other governors that he might appoint going forward, don't forget, this week is a really important week for the Fed and its independence, so to speak, because the Supreme Court, according to the FT, Supreme Court decision on Donald Trump's firing of Lisa Cook is looming over the Fed. And the Supreme Court could say that Trump can fire her while they await for a lower court decision on whether she should stay or not. And if the Supreme Court rules with Trump, that means basically Trump is going to take over the Fed. And that's why I think Stephen Mirren could be a Trojan horse. Do I think Trump wants to take over the Fed with people like Mirren, who wants like a 2% rates down to like 2.5% almost right away? He wants another, he wanted 50 basis points in the last meeting. He wants 50 at the end of October and 50 before the end of a year. He thinks it should be a lot lower. I personally think the free market should set rates, but that's another topic. But yeah, I can't tell you whether Donald Trump is going to be the next Andrew Jackson and slay the Federal Reserve, slay the central bankers, or whether he's just going to get in bed with them. And by that, I mean if he's going to merge the executive and the Federal Reserve. And I think that's even worse because, as the Constitution says, Congress, the people of the United States, they should control the coinage, the weights and measures of money. We of course, we don't have money anymore. We use paper, we use digital entries, we use copper nickel coins, not real money. The Fed has never minted money in its existence since 1913.
Gold and silver forecasts are generally positive for late 2025 and beyond, driven by expectations of interest rate cuts, increased central bank buying, safe haven demand from global uncertainties, and robust industrial use for silver. Technical indicators suggest strong upward momentum, though near-term consolidation is possible before further advances. If a systemic reset is fueling this rally, could gold and silver ultimately expose the full fragility of the fiat system? And what happens when the truth can no longer be hidden? Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.